Hey everybody, Economic Ninja here. I am so grateful you're here. I am with today George Drazenovic of St. James Gold. George, how you doing?
I'm doing well, Travis. Thank you.
Awesome. Everybody knows, some people know my last name and they know it's really hard to pronounce. So I had to get the phonetic, I had to spell it out perfectly because, you know, it's interesting. It's important to have people's names right. And I'm always struggling to do that. Are you pretty good with names?
I like to think so, but
Sometimes you screw them up.
Who knows?
So, hey, I wanted to talk to George today. George owns a gold mine, and that's on a lot of people's minds right now. Want to talk about that, but actually we wanted to talk about real estate first because I found out that George not only owns real estate himself, but he owns rental properties up in Canada. And we started going back and forth about cycles and how we can actually combine real estate cycles and talk about gold cycles. So how long have you owned rental property?
Oh, I'm in my second decade. I've owned it for owned properties for over 15 years, 20 years in one factor as well, one manner as well.
And what was the special year that you bought your first rental property?
2001 and then 2007. I bought a place at Whistler and I also bought a place in Vancouver proper in 2007, right during the middle of the economic, the Great Recession.
You know, I'm glad you say the middle because a lot of people, except for obviously my subscribers, they already know this, that they say that most people associate the crash, the Great Recession with 2008. And you're right. We were right in the middle of it. But it's interesting because you bought when I started buying real estate in 2001, when a lot of people told me I was crazy because we'd already seen a large run up, but they didn't see what the Federal Reserve was doing. And that was lowering rates after the dot-com bust. And now look at what happened to real estate. We roll up to 2007 and you bought your second property. Tell us about that, buying at the top in 2007.
I remember this because I had US dollars and I had to convert my US dollars into Canadian dollars. Mm-hmm. And so when I bought my place in Canadian dollars, I actually lost on the conversion. The Canadian dollar back then was actually worth more than the US dollar. So I lost on the conversion, and nowadays it's about a 20% premium, the US dollar to the Canadian. So I actually lost money on the conversion, and I also bought when the market was on the decline as well. But I was trying to be a contrarian. You know, it's interesting, Travis. I remember in 2001 here in the Vancouver Lower Mainland, there were premium properties on the west side. We call it's Point Grey. It's a Point Grey area. If anybody knows Vancouver, Point Grey is a very elite area. You couldn't give away a property for $350,000 just for a lot. That same property was on the market just a couple of weeks ago, and I saw it. It's the same lot for $3.5 million, and they had lineups outside the door. And so you couldn't give it away for a tenth of the price. But now you know you're having lineups to pay 10 times more. Just the psychology of real estate, it's mind blowing. You know, I guess it's the fact where people want to buy when things are in demand and they sell when they're not in demand. But that's not the way to accumulate wealth, in my opinion.
No, I completely agree. The masses always fall in behind, I say, the last 2/3 of a parabolic curve, but the real wealth is made when you're down at the 1/3, the bottom of that parabolic curve, and then you're selling it to all of them.
and I think you make money on the purchase of the property or the asset, not on the sale. On the sale, it's when you buy. Yeah. And I take that same philosophy in what I do with St. James as well.
You know, and we're about to tie into that because I love that you use the example of you make it when you buy, because that is, remember, we're trying to sell assets to people when everything goes crazy. And that's what's happening in real estate right now. But I'm glad you brought up the conversion rate to the Canadian dollar versus the US. I remember in 2007, 2009, if my memory serves me right, we were sitting at about $1.14, $1.20. I think it max. I don't remember exactly, but Canadian dollars to US dollars. And the thing is I'm glad you said, I don't know if most people realize this because a lot of people don't. We live in a society, if it was like this yesterday and it's like this today, then it's going to be like that tomorrow. But Canada actually suffered a lot of loss when it came to their trade as their Canadian dollar currency fell in value against the dollar. Could you talk about that a little bit? Do you know much about the trade on side?
I remember this because in 2000, when I went back to the school, I went to the University of Notre Dame, got my MBA there, and I remember the tuition there was significant, was almost 10 times more than it was here in Vancouver, and I was paying tuition at 62 cents on the dollar.
Man,
And, you know, the tuition itself was what, $40,000 US. So, and then 7, 8 years later, I was buying property in Vancouver, but it was the opposite. It wasn't a 62-cent dollar anymore. It was a $1.05 dollar compared to the US dollar. Things change quite quickly, but sometimes we don't even notice it.
Yeah, and to say things are changing quickly now is an understatement, but yet I still don't think the masses. A house across the street from me for sale right now, and there's still people lining up to go look at it, and I'm like, get ready, this is going to get exciting pretty soon. So let's talk about gold. So you know what, I'm going to try and do me a favor. I'm going to try and share my screen right now. Can you see the chart? Is it popped up?
Not yet.
Not yet. All right, let's do this. I got one little fancy thing. There we go, and it should pop up right now. Do you see it now?
Not yet.
The Ninja's tech isn't very solid. All right, this is what we're going to do. We're going to talk about the chart. I don't know why it's not all of a sudden wanting to work with me. But, you know, gold had a parabolic run from November of 2008 after the Great Recession. It locked in its bottom, I want to say second or third week in November, even as stocks kept falling and gold took off for a multi-year run. I know you're familiar with that run.
I'll even go a little bit further on this, Travis. Early 1970s, that decade, gold was when it was no longer part of the Bretton Woods system. Mm-hmm. It was $35 an ounce at the beginning of the decade, and then it shot up to $850 an ounce in 10 years. That's a super cycle, and then it kind of meandered until 2000. And then it shot up again for 10 years, and then it had a decline for the next 10. Gold tends to react in these super cycles. So if you can bet on the direction of gold, it doesn't matter when you get in, because you'll have years to get in. Yep. And generally what happens again with gold, when it appreciates a lot. Yes. And it appreciates over many, many, many years. And there's a lot of reasons for this. But I really do think, given what's happening in the macro, you know, the world that we live in, on the demand side, but also on the supply side, gold is getting harder and harder to extract. The grades of gold are collapsing. The major gold producers have to replenish the gold, and they can't find it. Yep. So the supply and demand metric for gold is all in line for another, maybe the greatest super cycle of our lifetime.
You know, and I'm glad you brought up the 70s, because I talk about the 70s a lot on my channel. I talk about how gold and silver usually are part of that parabolic move, but they're halfway to 2/3 up that by the time people figure it out. And the reason why I brought up the 2008 scenario is because gold topped out around, I want to say it was 19 and change. And now we find ourselves right back there. But a lot of people say, yeah, but gold didn't go very far. And it's hard to explain to people the $800 or $750 price back in 1980, because they go, well, that wasn't much. But it bought a lot of stuff. A brand new Honda Accord, you know, was $12,000. Now they're $45,000 to $60,000. My point being is that run up was even greater than what happened in 2012. But what brought it, or 2010, 2011, but what brought it down was that interest rates started rapidly coming down. The Federal Reserve moved, and then it took some time for people to get a little bit more used to the cost of equities rising. They moved back from gold into equities, and here we are again. Now, what do we have different? The Federal Reserve rate is at 0. What do you think about that and its effect that it could have on gold right now? Where can the Fed go?
I think they have to keep it at virtually 0, because the whole system, the whole world order, it can't afford interest rates to go up. You look at the indebtedness, and I go back to 2007, 2008, when the Fed was printing money. Gold had a major run for those 2-3 years. It had a major run. Yeah. And the printing of the currency, the US dollar nowadays, of the US, you know, by the US Fed, it's orders of magnitude many times greater than it was in 2007, 2008. Right. So if you look at the indebtedness, not just of the federal government, the governments, Western governments around the world are bankrupt. They're bankrupt. They have to print the money. They have to keep raising the debt ceiling in America. But that's just the federal debt. Yep. Debt and deficit. Then you got the provincial here in Canada, state deficits and debt. Then you got municipalities. Then you got pension funds. then you got the corporate debt, and then you got personal debt. Imagine all those small businesses that had to borrow lines of credit to sustain their businesses during this pandemic. Do you think any of these levels of governments or individuals or businesses can afford if interest rates go up significantly?
No, not at all.
It's Armageddon. And
Yeah.
I'm not a conspiracy person here, but I look at the math.
Yeah.
And the math doesn't lie. And it's the greatest opportunity in my lifetime to be involved in something that is contrarian to what's happening out there. And right now, with interest rates at record lows, they can't conceivably go up. So what's the alternative? It's printing money.
Yep.
And when you print money, hard assets increase and gold.
Yeah. And so, we saw that when they started printing money right after the Lehman Brothers crisis. They started doing quantitative easing, all of these measures to try and stimulate the economy. And that's when gold and silver shined. And I believe personally that the run that we're about to see, and we are in the eye of the storm right now, because gold and silver bottomed when people knew there was a crisis. People have a feeling there's a crisis, but they're not scurrying around going and getting extra food right now or anything because they're afraid of inflation. I have a feeling that is about to hit us. So let's talk about cycles and how, because a lot of things, let's tie in what your project is right now, because this is very interesting. You bought essentially a mothballed project, and where a lot of people would go, why would I want to invest in something that someone else didn't find value in? The timing at which that was mothballed was very interesting. So let's talk about that.
So we have a project, Travis, in the Yukon side of, in part of the original gold rush. There were several gold rushes in the world. The San Francisco gold rush in 1849, the Yukon gold rush as well. Those are some of the biggest gold rushes in history. So we're in the Titano Belt in the Yukon. We have an asset of 2.5 million ounces inferred resource. 2.5 million inferred resource. This project was last drilled in 2011 for 10 years.
Yep.
What happened in 2011 when this project was drilled, they had excellent results, but they drilled right at the peak when gold was, and in August of 2011, when gold was over $2,000 an ounce, US.
Yeah.
And then when they got the results 6 months later, and they had a report that was updated, gold went from over $2,000 down to $1,600 an ounce within 6 months. Well, the financings fell through. People ran for the exits for gold financings. And all of a sudden, this project had a difficult time raising additional capital. And then, as we know, the next 5 years, the gold market kept depreciating. So you couldn't finance some of the best projects in the world. Nobody wanted to touch gold. Yeah. So the bear market was catastrophic for the gold industry. Projects were mothballed. And this project specifically was mothballed and taken private for the next 5 years in 2015, 2016.
Yeah.
So
can I jump in real quick? Because I want to talk about inferred, and I want to actually let everybody know too, for full disclosure, I don't own this stock, St. James Gold, but why I wanted to talk to George today was because the timing at which this was mothballed is very important. Now, remember, St. James Gold is a resource company. When he's talking about drilling, the inferred metals is based off of their drilling results. And like he said, they had put all this money, as it takes a while to get these projects going, even resource companies. So as the price of gold was going up, they're doing their due diligence, they're getting the equipment on site, they're drilling, and then like he says, it falls. Now it's all of a sudden, it's that moment in time where all of a sudden investors go, oh, this, should we do it? Now, George, you're talking about, you're starting this whole program back up, and we are at what most financial analysts believe, I'm not one, that we're at the bottom of the gold price right now because of what's going on with the Fed and crazy government spending worldwide, right?
What you want to do is buy low, sell high.
Yep.
And this project hit a peak in 2011. It was mothballed because of the macroeconomics and the gold market. And we were able, through my relationships with the vendor and our ex-VP of exploration, I knew of this project. We just waited for the market to start to stabilize and start its trajectory in the upside. And so now what we've done is we've opened up the project again. So we've already drilled this season. We're waiting for results over the next few weeks, if not months. We're going to update the report, hopefully get some positive numbers. We hope, based on history, that we will have excellent results, and then again move this project forward. There's a couple things to know in the gold industry. You could either invest in the hard asset of gold, or you can invest in junior gold stocks. And this is important. Because if you really want to build wealth, you want to buy what I call high beta gold stocks. So if the gold market goes up 20%, if you can invest in junior exploration companies that have a beta, say, of 10 to 1, what that means is you're not getting a return on 20% of what gold is receiving, but you're getting a return of 200% or sometimes more. And so when the gold market increases, the juniors, they tend to explode in value. And that's where the real excitement for these junior explorers are. So you want to buy low, you want to get into the super cycle, which is what I think we're in right now with gold, because of the debt and indebtedness of the world. And you want to invest in junior exploration stocks that have projects that are being reborn, and you want to take advantage of this high beta, where you can really invest a small amount but get a great return with a little bit of luck.
And I'm glad you said small amount, because I think it's very important for people to get to know these companies now, not to put in everything into one basket. Diversification is key in anything. But like you said, I believe that we are at the bottom of the metals market right now. Gold and silver run where everything else is inflating like crazy. Gold and silver have still had a good couple of years, but nothing compared to rhodium or other assets, base metals, or even real estate, where everyone's flooding into those. But what's about to happen is a flip, just like in 2008, where we saw metals, monetary metals base out. They hit their bottom. Everything else kept falling. Real estate fell. Stocks fell for much more a longer duration, but then metals took off. And to me, and I'm going to ask you, I think this one's going to be much more exciting than 2008 and quite honestly 1980 combined.
If you look at the history of the precious metals market, the junior explorers, when they turn on the upside, they turn very quickly. Yeah. And so if you're not positioned early, it's tough. It's kind of like the dog is chasing its tail. It's tough to get in because of the appreciation. So when they turn to the upside, they happen very, very, very quickly. And so the time is, I think this is a great opportunity for me as a company. We acquired some assets in Newfoundland. We acquired the assets in the incredible asset in the Yukon, when the market was kind of still sleepy. And this is when you want to get in. So now what we're trying to do with these projects is to develop them, get the results, and push these projects to the upside. Now, these projects that we talk about, the one specifically in the Yukon, it's still a baby. Yep. So I'll give you perspective here. Historically, until 2011, only 17,000 meters was drilled. Mm-hmm. To get a 2.5 million ounce inferred resource, what we have nowadays. You have projects around us that have drilled hundreds of thousands of meters of drilling to get a 1 or 2 million ounce deposit. One example is Kaminak. Kaminak, right to the southwest of us, similar type of porphyry deposit. They drilled 250,000 meters to get their results, which they sold off to back then Goldcorp for $500 million.
Yeah. How many meters are you going to drill in this next program?
Well, we already drilled just under 4,000 meters. Okay. We were drilled very late in the season because the project was acquired very late in the season. And so again, we're in the first inning of a baseball game. This is a baby in its evolution. So what you want to do, I think, as an investor, you want to look at projects where the company has de-risked a lot of it, and then also have invest in these projects where they have incredible upside. And so I think what we've done is we've taken a significant amount of the risk off of the table for investors, but we've still given our investors the incredible opportunity to participate on the upside. Perspective here: 1 out of 1,000 exploration projects, only one, less than 1 out of 1,000 will actually have a discovery. And of those discoveries, only 1 in 10 maybe might end up being a mine. Yeah. We've de-risked the 1 out of 1,000 because we have a 2.5 million inferred resource already. Yeah. What we're looking to do is build this out and provide value for our shareholders.
I'll tell you, and it's crazy. You never want to be around a mining CEO the day metals get hammered in the markets, the paper prices, because they're watching their market cap fluctuate huge. But me as an investor, I'm looking at it going, well, did the mining company do anything wrong? No. oh, paper metal's going down. So the algos are trading. That means it's an opportunity for me. And that's why I want to introduce yourself and all these other companies out on the channel, because I'm going, this is the time to watch. This is the time to get to know the management team, get to know these properties, these projects, and they're, like you said, the proximity to other projects that have been like right across the road. And some of these are literally mining this much metal out of the ground. And then those days where those snap downs come, to be able to, I mean, like you said, it's leveraged on the upside, it's leveraged on the downside. And it's not because you changed anything. You didn't wear a different color tie that day and cause the stock to go down. There is obviously other factors that could lead to that. But I think it's, like you said, it's an opportunity right now to be getting ready, watching, and then pouncing.
I think there's, if you look at junior exploration, there's value of having a portion of your overall portfolio in junior mining stocks.
Yeah.
Because of the diversification and return possibilities. What you want to do as well, I think, as an investor, this is what I do, is I look at these management teams, these companies, and I watch them, and I look at when they make an announcement, they say they're going to drill, or they say they're going to do something, did they execute on what they said they would do?
Yeah.
And you watch these companies, and if they have a track record of executing on what they state they will do, then I have confidence that the company is giving shareholders a real opportunity to enhance their portfolio on the return side. So,
That's awesome.
Our company, we've made statements that we've announced that we're going to be drilling. We've made announcements that we have a strategy to expand our resource, and we've done that. And we're now just waiting for the results. And what we want to do is continue the momentum, look at the results, build on that, and next year drill a lot more and get a greater resource as well. So
nice. That's awesome. Well, hey, in closing, is there anything you want to close with? Because there's a lot of stuff going on in this world right now, and I know there's a lot of people that are freaking out.
You have to, when you put a portfolio strategy together, once you think it out, don't get emotional. Don't let the market dictate you, because the market has a way of bringing the worst of human emotions out of us, which is greed and fear.
Yes.
Right. We're greedy when things go well. We want more of it, and we're fearful when there's a small correction. Take the emotion out of it. Do your homework. Look at these companies. Look at their assets, and look at their history. Do they actually do what they say? And then you can make, on a risk return basis, a decision that makes sense for you.
Yeah. You know what? You couldn't say it any better. Emotion is 99% of what's going on in the markets, especially now. Well, thank you so much, George. I really appreciate you coming on. Again, guys, George is from St. James Gold, if you want to check him out. Do you want to give him the website?
Yes, we are www.stjamesgold.com. So STJAMES gold.com.
Right on. Thank you so much, James, for joining us. Everybody, #gold below. Let's get the word out, because I think we are at the bottom of a cycle. We are in the eye of the storm. With that being said, everybody, the Economic Ninja is out.
Hi, I apologize. Was I calling you Travis? I should have been calling you the Ninja.
It's an awkward thing. I don't know who Travis is, but I just sort of go with it. It's one of those things. We're just meeting. It's new. It's fresh. I'll forgive you this time.
Thank you. Well, Ninja's like the gold market. You move fast.
That's true, unless you see me try and tie my shoes, and then I just get out of breath. All right, man. We'll talk to you later. Ninja, out.